we welcome everyone from Bloomberg Television Worldwide and, of course, Bloomberg with full coverage of the president's press conference at 11. This is the political dialogue now, Mohamed. I mean, this terrific set of uncertainties out there. We've heard lots about structural solution, long-term solution. Nobody in Washington cares about that. What is your counsel to Austin Goolsbee and others in the White House about meeting the immediate need?
First, let's have a better recognition of the situation we're in. Second, let's attempt to move from a policy approach that is too piecemeal, too ad hoc, and too reactionary to one that is comprehensive and forward-looking. And third, let's make sure that the policy response covers both the demand and the supply side. It's going to take us a long time to get out of this deleveraging process, but we have to start by recognizing it for what it is.
Have you ever been invited to a summit by the White House? You were in on the hierarchy out at PIMCO? And has anybody dialed 1-800-BILL-GROSS and said, hey, come on down, let's chat?
Yeah, Bill went to Washington a few weeks ago for the housing summit, and I think he was very clear in expressing the view that structural problems need structural solutions.
All the uncertainty you mentioned, all the problems, how much of this has to do with the fact that the administration is pretty much academics and people from nonprofits and people from government? In other words, nobody from private industry.
Ken, that may have something to do with it, but I think the main reason is that they inherited a very difficult situation, that the political process and the policy process in an industrial country is not comfortable thinking in structural terms. It prefers cyclical terms. So it's a tough situation. I don't think anybody would have wanted to inherit it, and you've got to change the mindset.
One of the mindsets and one of the changes we've seen is a recovery, Dr. El-Erian, in China. Great exports, great surplus 2 months in a row. I've done a couple charts on it here this morning. Are we still losing jobs to China, or can we even broaden that out and say we're losing jobs to the land of Mohamed El-Erian, all the emerging markets that you cover?
Tom, there's a couple of things going on that are really important when you talk structure. One is national realignments, and we've talked about the U.S., but the other one is a multi-year global realignment, which involves the migration of both growth and wealth dynamics from the west to the east and from the north to the south. Now, what we're seeing in China goes beyond that. What we're seeing in China is the reestablishment of the imbalances that got us into trouble to begin with. And it's important to recognize that the markets are telling you something, which is that as yet there aren't enough structural responses either in the industrial world or in the emerging world.
An important question. Our Bloomberg News team was all over me, and they said, Dr. El-Erian, you've got to ask them about QE2. Where's the 10-year yield going? I mean, right now, 2.79%. If we go out and do a $500 billion or $1 trillion tranche of QE2, does it really push the 10-year yield down to 2%?
I think you'd see it move down to 250. It may go down below that. There's going to be a distinction, though, between the impact of QE2 on financial markets, which will be to lower yields and raise the price of Treasuries, and the impact of QE2 on the economy, which is going to be muted. I think what we need more than anything else is what we call at PIMCO instrument innovation.